Good morning. Thanks everyone who made it through the rain and the traffic. It's great to see so many people here. Thank you so much, Superintendent Harris, for joining us. I know this is a long walk from your office. No, we're thrilled to be in the financial district of New York, and we're thrilled to have you here. So for people that are less familiar, we've got people actually dialing in online in the live stream from all around the world. We'd love to hear a little bit about your background, how you became sort of the regulator of the New York Department of Financial Services, and actually, what is the New York Department of Financial Services for those people that really should know that don't know?
Yeah, perfect. Well, thank you so much for having me. Good morning, everyone. It's good to be here with you all in person. It's so good to be back doing these things in person. So a little about me. I've spent my whole career in financial services. It's the only thing I know anything about, frankly, from starting my career at Sullivan & Cromwell here in New York, doing derivatives and financial regulatory work, then to the Obama Treasury Department, where I was a senior advisor to Sarah Raskin, then to the Obama White House, where I ran the financial services and housing portfolios. Then I went to San Francisco, and well, I should say, as part of my time in the White House, I stood up the White House FinTech working group, as well as a distributed ledger task force that was really national security focused. And when the administration ended, I thought, I've been talking about FinTech, maybe I should put my money where my mouth is. As a government employee, you're not being paid very well. So I was like, I can go start a company, because if it's a complete disaster, I won't be any worse off economically. Thankfully, that was not the case. So I went to San Francisco and helped found an insurtech company that then went public earlier last year. And then I was teaching grad school, teaching financial regulations, sitting on some boards, doing my own angel investing, before I had the great honor of being nominated to this post by Governor Kathy Hochul and confirmed by the state Senate. For those who don't know DFS, you should. It's a wonderful agency that has incredible breadth. So we regulate banking, including about 80 foreign institutions. 17 of the 30 GSIBs are our regulated entities, a number of state chartered banks, thousands of insurance companies. We're the group-wide supervisor for AIG and MetLife, sort of sizable companies, virtual currency, money transmitters, pharmacy benefit managers, debt collectors, student loan servicers, you name it. It falls under our regulatory purview. So it really is a wonderful agency that gives us a broad view of the financial services sector.
And they have some of the best views in New York City as part of their offices. And from that position, you've just started your tenure as superintendent. What are you really looking to accomplish during your tenure? Yeah,
so we're about 8 months in, and speaking of the view, when the governor offered me the job, she said, you have the best office in state government, which is a little awkward when you're talking to your boss, but it's true. We do have wonderful views, so we invite folks to come in and visit us and visit with the team. So there's a couple of things. I think about what I call the 3 Ps, which are policy, process, and people. On policy, I'm a firm believer that we can be good for consumers, good for markets, but also cement New York's place as the financial capital of the world, be a great place to do business, whether you're in crypto or other areas of financial services. Process, we'll talk a little bit more about that, but we're really working hard to make sure we have operational excellence in everything we do at the department. And of course, people, as you all know, it's a war for talent. And so we are really, really trying hard to recruit the best and the brightest. We've got a wonderful new head of our virtual currency unit, Peter Martin, a new head of our research and innovation division, Caitlin Azro, and many, many more. But with respect to virtual currency, we're really doing a lot of work to transform that bureau. And internally, we call this transformation initiative VOLT, for vision, operations, leadership, and technology. Government people love acronyms. We can't help ourselves. Vision, it's really important that we continue our role as the preeminent regulator of virtual currency. At DFS, we've been at this for a long time. We're glad that the federal government is working on this now as well, and we're working very closely with them to lend our expertise and experience. But we really do want to make sure that we maintain that role as the preeminent regulator in the space. Operationally, we're doing lots of things around process management. It's no secret that the licensing and business approvals have taken too long. So we're doing a lot of work on process management to make sure everything we do is much more efficient, faster, but without sacrificing the regulatory rigor that we need. Leadership, we've added 15 people to that team just this year. We're going to triple the size of the unit, I think, by the end of the year, and we'll continue to grow from there. And we're engaged in a lot of thought leadership, too, around, we've just done our blockchain analytics guidance. You'll hear more from us on stablecoins and other things soon. That's something we've been working on for a while. And technology. We actually use blockchain analytics software ourselves in our regulatory role. So we're really hard at work on this transformation initiative, and I think it's going to be great for the industry and great for consumers.
And yeah, we've seen some of that work that you put out, and particularly on the regulatory side, but also when incidents occur, NYDFS is sort of there responding to it and have people who have that expertise. The New York State budget just passed, and sort of there was a tasking there for NYDFS to make an assessment of actually overseas cryptocurrency businesses doing business, and wondering sort of what that was about, and if you could expand on that for people who might want to know about it.
Yeah, so it's actually for all of our regulated entities, we are funded by assessment. So whether you're a bank, an insurance company, now a virtual currency company, if you are regulated or licensed by DFS, we will begin to assess companies. It comes as part of a formula based on size and complexity, but that's what really enables us to fund our operations. We're not funded by taxpayer money. And that's important, and it's important that we have that authority because it will help us build the staff, it will help us bring on expertise, and it helps us examine the companies that are under our purview, and that really is a service to the industry. When you can work hand in hand with your regulator and your examiners, and we can help identify issues early before they metastasize, it really is a service that we can provide to the industry, and it helps us as regulators better oversee the market and protect consumers. So that assessment is really going to go a long way toward helping the space grow and helping make sure it grows safely.
And I think that one of the things that that approach has is that obviously that applies to the state of New York and for all of your licensees. But how does that translate your approach? How do you translate that to sort of the broader federal ecosystem and actually coordination with other state regulators? We see Wyoming and other places also being forward-leaning on this. How does that collaboration take place?
Yeah, there's not a day that goes by, I don't think, that Caitlin, Pete, myself, that we're not speaking with federal regulators, law enforcement, other state regulators, international regulators. I think it was just last month we had regulators from the UK, France, Germany, Singapore, others in the office taking advantage of the views. So that coordination and collaboration is incredibly important for what we do, and especially as the federal government starts to look at this space, to be able to come to us or for us to go to them, where we spend a lot of time on Capitol Hill, so that they can learn from our experience, I think is going to be a benefit to everybody. But I will say, there is a lot of talk when you talk to other regulators, and I think most particularly in the federal government, there's a concern about a race to the bottom. Our state's going to regulate differently, and those with lower standards are going to attract more companies, and that's going to present safety and soundness and consumer protection issues across the board. But what I would say is we haven't really seen that play out in practice. New York has some of the most rigorous regulatory standards. I think our framework is more rigorous than Wyoming, certainly broader. And we've got now 33 licensees in the state, many more in queue, more than Wyoming. Not that I'm competitive. If you look at venture capital investment in cryptocurrency last year, about 46% of it was in New York-based and licensed companies, which is about 2x Silicon Valley, about 8x Miami. Again, not that I'm competitive, but we really do see that the good actors in the space value that regulatory framework. They value transparency. They value knowing the rules of the road and having that clarity. And so we're going to continue to engage with industry, engage with other thought leaders, so that we can stay abreast of trends in the space, continue to provide that clarity, and be a good regulator.
And you know, I love a bit of competition and how that plays out. And I think that you know, there's an interesting dynamic also within the industry of like how best should industry as a whole, and obviously there's competition within the industry, but how should the industry as a whole come and engage with DFS on these types of issues? Because, you know, there is, you know, obviously data and there's comments, and, you know, what are some of the best ways that industry can come and help you do a great job as a regulator?
Yeah, well, and I should add the caveat, it's always friendly competition, right? Yeah. We do a lot of work with Wyoming and other states and their Washington delegations. So there's lots of ways to engage, and it's one of the great things, I think, about DFS. We have so many tools at our disposal, guidance and FAQs and regulation and just conversations. So we always welcome companies to come in and talk to us. And maybe it's about something particular to your business or your license application or your exam, but maybe it's about something you're seeing in the space. Maybe it's something you're seeing coming down the pike that you just feel like we should be aware of. And maybe it's a place we should engage. Maybe it's a place we shouldn't engage. All that feedback and data collection is so important when you have a space that moves as fast as this one does. So to help us sort of keep up with things. So we always welcome that dialogue. We spend an incredible amount of time and energy engaging that way. And I will tell you one thing I learned, right? I've been in the entrepreneur's shoes. I've had the startup in the highly regulated space. And the one thing I always tell people is, like, the golden rule is you never want to surprise your regulator. We don't like surprises. We like to know what's going to happen. And so one of the things that I did with my company is before we ever filed an application, before we ever changed the business plan, before we ever wanted to embark and move into a new geography, I went and sat with our regulators and sort of laid out our plan, our thinking, heard their concerns. We could adjust accordingly, right? Sometimes there were places where we agreed to disagree, but having that dialogue, building that relationship and that trust was so important to the success of the company. And I think there's a lot of muscle memory in the industry, not just with respect to virtual currency, but in financial services writ large, where it's like you just want to stay off the regulator's radar. But I would say that's really not the way to go. Come in, talk to us, talk to Pete and Caitlin, talk to me, and tell us what you're seeing, what you're experiencing, what we can do better, what we're doing well. All those things are really important. Here's the other thing I say, because I never miss an opportunity to make a shameless recruiting plug. If you think we've got the right approach, if you think we've got the wrong approach, I would say come in and work with us in public service and as part of DFS. As somebody who's been both in the private sector and the public sector, there really is nothing more rewarding, put aside your personal economics and finances, than being in the public sector, working hard to solve problems, make sure innovation is happening in a way that's smart and responsible, but that is really good for the ecosystem and the economy.
And you know, I think the DFS in particular has, out of, you know, some of the regulators in the world, has really lent into the technology and the data to actually inform sort of how things are going. And, you know, it sounds like you're increasing your staff at the pace of a hyper-growth startup. So, like, right, maybe that is sort of something that is similar. But, you know, we've seen, you know, an incident like Twitter getting hacked, yeah, and, you know, there being sort of a response where people at NYDFS or at the front lines are actually using technology to be able to investigate that and put out information back into the private sector. I was wondering if you could talk a little bit about how, you know, what is the strategy behind DFS, like leveraging data, leveraging technology to, you know, increase market supervision in this sector? Yeah,
well, as I mentioned, we're doing a lot of work with blockchain analytics, and a lot of that was spurred by the war in Ukraine, where we said we need to be deploying these tools ourselves to make sure that companies aren't engaged in sanctions evasion or other illicit activities. But more broadly, we have a 2-year strategic plan where we're really going to be doing a lot to build out our data analytics in-house, not just with respect to virtual currency, but across the board. So we can look at the climate data we get, we can look at the financial data we get, we can look at sanctions information, right? And draw insights, as you all can appreciate, that you need a computer, you need technology to draw, so that we can stay on top of risks that we see or trends that we see developing in the space. So we have this 2-year plan where we'll be doing a lot to just collect and organize our internal data, add to our data sets, and then leverage that for the betterment of the market.
And I think that's super important, and there were, even for this industry, sort of early reporting requirements on data that came under the BIT license, and there were just sort of novel approaches that were taken in the policies that were developed. And I think one of the things that is top of mind really for this entire industry, but also the world more broadly, is the intersection of cybersecurity and financial regulation. And DFS was actually really the first regulator that brought in both the cybersecurity regulation frameworks and financial regulation frameworks in one place. And I was wondering just sort of like how important you think that is moving forward, and tell people who aren't so sure about what that exactly means. What does that approach mean for DFS long term?
I mean, it's partly because of the breadth of our mandate, right? It felt it was important to have that cybersecurity regulation, and I can't take credit for that. As you noted, DFS was the first to have cybersecurity regulations in the financial services space, and that was now in 2016. So in the world of technology, in the world of cyber risk, it was actually a long time ago. But it was great that DFS was able to do that, to set the high watermark when it comes to cybersecurity regulation. We're actually now in the process of amending that regulation to update it for 2022 and beyond. But in this space and broadly within financial services, I mean, you just can't deny the risk of cybersecurity, right? Cybercrime and all of those things. So we want to make sure that all of the institutions we regulate, from the smallest insurance agents to the AIGs, Goldmans, right? The large institutions are well protected, that we're taking a proportionate and risk-based approach there, because it's good for the market and keeping that secure because of the interconnectedness we have, and it's good for consumers. So you'll hear more from us on that. We've been doing a lot of work on ransomware insurance, ransomware and crypto and cybersecurity, right? All these things are really overlapping. So it's important that we're staying current on all of that work.
Yeah, and I think we've seen sort of the benefits of, again, sort of the broad approach of both sort of regulatory policies, but also guidance, information sharing coming out from DFS. And I was wondering if you could take a longer term view and look out maybe a few years, maybe 5 years from now. What does the sort of regulatory architecture look like for digital assets, and what are some of the things that people should be looking to expect over the medium long term?
Yeah, I wish I had a crystal ball. There's so much going on in the space, federal level, internationally. I think there's a lot of things. I think we're going to see the regulatory framework shift a bit, because virtual assets, I think, are the first type of assets we've seen that really are sort of shape shifting, right? As we're learning, as we watch the federal regulators engage in the space, doesn't necessarily fit neatly into the commodities bucket or the securities bucket or the currency bucket. And so how do you tackle a digital asset whose definitions sort of change based on the use case? And I think that's going to require regulators to have a more 21st century framework for thinking about these things. I think the federal government is doing a lot of that work now. But often when I talk to people about virtual currency and where it is today in distributed ledger technology, especially for the uninitiated, I say, imagine Amazon when it just sold books. And if you had said in 10 years, they're going to deliver to you anything you want overnight. It's AWS, it's a small business lender, it's right. People would have been like, right, but they deliver books. And I think that's sort of where we are with this space, is none of us really know where it's going to go, but I think the space has a ton of potential. We need to make sure we're channeling it in a responsible way. I think there's a lot of potential for financial inclusion and inclusive finance that is still yet to be explored. So I'm really excited about it.
Well, with that, I mean, we're very excited to come and check out the views. We're happy to be engaging with you here at Lynx New York. Thank you so much for coming, and you know, good luck in the rest of the tenure, and thanks for being here.
All right, thanks for having me.